All right. Good day, good day, good day. How are you doing? I hope you're good. So this is a request which came through. You said I should explain the nameable candles on a trending market. Okay, so let me just remove this. All right. So first things first, I'm just going to explain trending markets, downtrend and an uptrend. So a downtrend, basically, you need to identify the highest high or the peak formation high. Or PFH, peak formation high. So once you identify a high, so let's say price was coming up, the next thing you want to identify is a break of market structure. That's the first thing. Once you identify a break of market structure, this leg must not break this high so that this remains a valid peak, right? So that's a failed swing. Once we get a failed swing, potentially you can start selling from here if you understand what's going on or if the pattern is clear. Or you want to wait for the next break of structure, which soon as it happens, you want to wait for price to create another lower high. So soon as we get this pattern on its own, that's a bearish um, downtrending pattern. Okay, so once we get this pattern, what are we looking for? We're looking to sell, right? So what usually happens on a downtrend is price will still come towards this high, and most of the times we'll take it out with a wick or with a pin bar, right? Then the downtrend will continue. It can happen two times, price comes again, takes out this high, but again, that downtrend continues with a break of market structure, lower highs, lower lows, just like that. So that's a downtrend. Without actually scrolling on this chart, you see that this was the initial high, right? Then price broke a level. We had a failed swing here, or we almost could have started selling here. But if you notice, price came back up. We took out this high, which now made this the peak. Once we identify a peak, the next thing we want to identify is a break of market structure. So we had a double break of market structure here, which usually shows that there's momentum in the market. Right. So we retrace, we drop, we come back. So this scenario here is this. It's just a variation. Then we create another lower high here, another lower high here. What do we have here? Another scenario. So always in a downtrend, you're always trying to look for these liquidity sweeps. Okay, so that's a downtrend. In an uptrend, it's simply the opposite. So you want to identify the peak formation low or PFL, break in market structure, failed swing. So sometimes we'll have like an inverted head and shoulder. These lows here will be equal. That happens sometimes, but you just need to keep an eye mainly on the break of market structures. Then as the price breaks, we know we're buying. They can come back to the lows, pin bar, push up, lows, wick, push up, just like that. So this is an example of an uptrend. And again, these structures need to be broken. Also, just be in mind that the broken structures can also act as like a broken zone, which now becomes support if you are buying, vice versa for sales. So now, where do you want to look for the nameable candles, the four nameable candles which I mentioned? So if you're in a downtrend, in these areas, this is where you want to get your nameable candles right here. This is where the stop hunt completes, right? So you also want to identify these like on daily H4, H1. If you can identify it on higher time frames, the better. Also means the setup will take some time playing out. If you can identify it on a higher time frame, it means the next couple of days, for example, here there will be bearish day, bearish day, bearish day, bearish day. So within those bearish days, there's also entries like on smaller time frames, which is something I'll explain maybe a bit later. All right, that's for naked charts. If you've got moving averages, those nameable candles will occur or will form on or near your moving averages. Okay, so the moving average just guides you in terms of a trend. If a moving average is slanted down like this, usually shows there's a downtrend. So you're anticipating price to retrace into the moving average for you to be able to take a sell. So let's maybe go to the 4 hour. Let's actually use the H1 because I mainly use the H1 for my nameable candles because I day trade. All right, so here we've got a bit of a downtrend, right? Do we agree that we've got a bit of a downtrend here from this high to this low, right? We have a peak, price breaks a structure, pulls back up, drops, breaks a structure. Okay, this is the move which breaks a structure, pulls back up, takes out liquidity, We go sideways a bit, take out some more liquidity, then the sales continue. Take out liquidity, sales continue. Here we did not take out liquidity. We usually want to see them spike up to take out that liquidity just like here. So where am I looking for my nameable candles if I'm a day trader or if the market is trending like this? I'm looking for my nameable candles on or near the 13 EMA if price is giving me that market structure. Sometimes price will be giving deeper retracements like the ones you see from this high. We're literally coming back above the 13, then coming back below, coming back above the 13, coming back below. Typically, I want to see this whereby we only retrace into the 13 EMA. So once I retrace into the 13, that's where I'm looking either for a pin bar. So while we are on the pin bar, the reason I always love this candle is because if the pin bar appears on a point of interest like a moving average, remember that's a dynamic resistance area. It simply means that this wick is representing what? A stop hunt or a liquidity sweep. One of those two. It's all more or less the same thing, just different terminologies. So if I can get a pin bar with a wick or any candle with a big wick like this, for me, it shows me that the stop hunt is complete and I can sell. Then my stop loss is to come above the wick. That's the safest stop loss area. If you are able to identify that, that's perfect. If you are able to identify a doji, that's also perfect. It has to be on or near the 13 EMA for me. So if you're using naked charts, it's simple. Just mark your normal support and resistance areas. And if you still see that candle appearing, especially on a retracement point, like here, you see this price action here, we are pushing down on or near the 13, then you take your trade. On or near the 13, you take your trade. As long as you've identified the trend. The main thing you're waiting for is the retracement to complete. Then as price gets into a point of interest, either a resistance zone if you're selling or a dynamic resistance like a moving average, that's where you want to take your trade. You can also take it on the liquidity sweep if you have positively identified that you are in a sell motion and you've positively identified this as a liquidity sweep, right? So soon as you see this and price closes back below this high or the previous high, which has been taken out by the sweep, you can still use that nameable candle for an entry. Then if price drops and retraces back into the 13, same thing. So as we retrace, if the nameable candle appears here, you take the sell. We push impulsive move, we retrace nameable candle appears here, take the trade. If price comes back up, maybe we take a liquidity sweep and the nameable candle appears here, you can still take your trade. Then if we drop, we retrace again into something, nameable candle appears here, you take your trade. So nameable candle can appear either on a liquidity sweep area or on a retracement level, which can be also a fair value gap area or an order block area. Any point of interest you have, especially if it's a higher time frame and you see this candle appear, you should actually use it to take the trade. So let's see if I can identify. Okay, maybe let's go back to H4. Let's use H4. Okay, so from this 4 hour, right, do you see this low here? This low right here where I am to the left. Notice how Okay, let's actually put a line here. Notice how price comes and just takes it out again here. Then we break structure. Soon as we break structure, it's now safe for us to start buying. So you might see this again. You see, we do have a nameable candle, this pin bar here. It's taking out a point of interest. So if you're confident to take this trade after the close of this pin bar, you can still take your trade, stop loss below the pin bar, and you hold targeting the next highs which you see as you take profits, as you see right here, if it's a swing trade. You can also wait for a break of market structure, which is the safest trade, because now if you break a structure, price is showing you the willingness to push up. Once we get the impulsive leg as we retrace, if we get a nameable candle here, we can execute. So sometimes you might get a nameable candle. For example, here we do agree we've got an inside bar. This candle here, inside bar. So we use a buy stop. Each time you've got an inside bar, you use a buy stop if you are buying, sell stop if you're selling. So since we are in a bullish motion, we already have a pattern. Do we agree that we've got a peak formation low? We push up, we retrace, we push up, we break two or three structures to our left, showing us that the trend is now bullish. So we are now targeting the next high, which is this one. Right. So as long as we start retracing, we are now waiting for price to come either to an order block or to fill the gap or to come to a dynamic level or to come to a broken zone. Those are all your points of interest. But again, you see this is H4, which means if you mark these points of interest, sometimes you go to H1. Then when these moves or when these nameable candles line up with your trading session, it could be London session, it could be New York session, sometimes it might be Asian, depending with the assets. Soon as you see a nameable candle appearing on a point of interest, you should execute the trade. Just that this price action is too far. I won't be able to go to H1 and show you the exact entries. I think this is July last year. So let me come maybe to the current price action. Let me show you maybe, yeah, right here. I think I'll be able to explain something. Right. We do agree that this is the lowest low, right? From this lowest low here, do you notice that this pin bar actually took out the initial low here? That's a valid liquidity sweep. So as soon as the pin bar closes, you can still buy and target the next high as you take profit, right? Or you can wait for a break in market structure. So the initial break was actually right here, this break and retest. We have a pin bar here. Then we had a bigger move. Notice that this level has not yet been broken. So sometimes you can wait for that level to be broken. This is 1 week of data since we are on H4. So sometimes you might wait the whole week just waiting for more confirmation. Then soon as we now break multiple structural zones, we now have that confidence that we are bullish. So we've got a peak break of market structure. We are anticipating this. As price is now retracing, where are we going to buy? What points of interest do we have? Okay, we have an order block here, point of interest. We have a breaker here, which is this order block, which has been broken, will potentially be retested, which is in line with these three highs, which is now a support zone. We also have a dynamic support zone, which is the 13 EMA. So what happens then? Pin bar or doji, another pin bar or doji. None of them, the second one did not take out the first, which means if you had bought here, stop loss here, you can still take a buy there, aim for this high, aim for this high. You can even take your entries on the 4 hour. You can even take your entries on the H1 or M15. You simply need to understand what your structure is doing. So if you missed that setup, this was another opportunity here with this doji. Notice all our nameable candles are appearing on or near the 13 EMA, of course, with other confluences. I usually refer to the 13 EMA because that's what I use. But if you're on naked charts, Same thing, just mark your normal support and resistance. After we get another break of market structure, as we are retracing, where is price going to react? We have an order block here, right? Which is just below this broken market structure. We also have the 13 EMA. So sometimes we'll get a reaction here and we push up. So if you are bullish, you want to see bullish nameable candles most of the time. So you want to see a bullish pin bar, bullish doji, bullish inside bar, bullish engulfing candle, right? So if we come below the 13, for me, if I have a bullish bias, I usually just wait for price to come back above. So let's say I did not use this doji for entry. Soon as I come back above, that confirms I'm still bullish. I'm looking for the next pin bar available, next doji available, next inside bar available, next bullish engulfing available. Then I use that as my entry with my stop loss below the pin bar. Usually your stop loss, if it goes below the pin bar, that's perfect. So same applies to all this price action you see up until we get to last week. I want to be able to go to H1 and show you something. So take note of these highs here. This is a liquidity sweep, by the way. So you might have taken a sell here. If you're taking a sell, you're targeting the last lows you see, right? So if price does not take out a low, you know we are still bullish. Then you just also have to mark out points of interest on the impulsive move. So if this was the impulsive move, we've got this point of interest, we've got this point of interest. So price finds support on these points of interest, as you see. Monday, Tuesday, last week, we did not have the momentum we wanted to see, but the first trigger for a buy was this. This looks like a break of structure on a smaller time frame. So let's go to H1 and see what we had. So once you come to H1, you are able to identify Monday, Tuesday. That's why you see I've got period separators on my charts. It makes it easier and faster to identify the days. Double lines represent a weekend. So this was Monday's lows, right? Tuesday, we took out Monday's lows. Here is a structure here. So either you would have used this pin bar, although it's bearish, we have identified a liquidity sweep. If you're not happy with it, wait for the break of market structure. So we had a double break here. Then price retraced. We had nameable candles right here, which means we could have bought. This is New York session. This is New York PM session. If you are buying in any of these areas, what's your target? You are aiming for this high. You are aiming for these high because those are the points of interest where price can get to. So unfortunately, this move did not have enough juice to take it to this high. So it could have come and taken you out during midnight. Personally, I rarely hold overnight. Okay, so most likely I would have missed that trade. But now coming into Wednesday, what did we have? So we identify that during London session, this is actually a liquidity sweep of these lows. So if I want to buy, I want to see this structure get broken, this structure get broken, this structure broken, and so on and so on. So London session breaks a structure and retraces. What do I have? I've got a doji or pin bar candle, that black candle you see. Where is this candle located? I have this order block here. I've got a dynamic support. I also have this order block here, this zone. So we are within that zone. We are also on the open price. Soon as it closes, if it's bearish, you can use a buy stop so that you don't get too confused. But if it's bullish, then you don't hesitate. You just enter stop loss below the pin bar, then you hold your trade to the next highs, which you see to your left-hand side. Then as the trend continues, so this pushed up during London going into New York. New York started with a little wick, with a little pin bar, although it's a little far from the 13 EMA. This is what we call a variation in the market. And we had what we call momentum, right? We've got momentum in the market. So if you have momentum, you won't get deep retracements. These pin bars or the nameable candles will appear but not on the 13 EMA. So that's like a variation. You'll be able to spot it if you backtest more. So you could have used that entry with a stop loss here. Price would have still pushed up. I don't look for trades here because we are going towards the close of the day. On the next day, what am I looking for? I know I'm in an uptrend, so I'm looking for nameable candle on or near the 13 EMA, which is what exactly happens during my London Open, right on the open price. 13 EMA is close by. That's a dynamic support, and I get two pin bars, especially the green one, especially at London Open. That's my cues on time. Entry, stop loss, allow the trade to play 1:3. I usually go for 1:3. I'm so happy I see some of the guys holding more. But for me, I'm happy with the 1:3 risk to reward. So as the price retraces into my 13 EMA, I'm looking for the same thing. Nameable candles, target. So again, I'm just referring to H4 and H1. You should also just check your daily for your bias, of course. Check where your next point of interest is. But yeah, that's how you can trade these nameable candles on a trending market. They mainly also work on a trending market. You need to identify a trend. So from this high, little break of structure here, failed swing. So if we break this, it means we are most likely bearish. We break, we retrace, nameable candle. We are now selling. What are we targeting? The initial low of the day. Usually that's what you would target here. So this would basically be a short-term trade. You might also target this moving average, but sometimes if price is in a strong bullish trend, the sell patterns will be like trend resets, which means you might get a drop, but the buys will then continue. So you just want to pay attention to your market structure, basically. So if you break market structure again to the buy side, same thing, you start looking for buys, break market structure, start looking for buys. Here you can see I was waiting for price to retrace into this level, but they did not. I was also waiting to get an entry on or near the 13 EMA. That's how I plan my trades, right? On or near the 13 EMA. These arrows were put when price was in the London before New York. That was my pre-New York analysis, basically. So yeah, that's how you look for these nameable candles. And I hope this video was helpful. If you still have questions, don't hesitate to hit me up with a message and I'll try to elaborate a little bit further. Apart from that, I hope you watched until the end. I hope I was not too fast. I hope it was understandable. Enjoy the rest of your day. Good trading.